The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marcus with Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's happening in the world of commodities. Shawn, how you doing this morning?
I've never, ever been better at being on your show right now.
That's pretty good, Shawn.
It is.
That's saying a lot.
It is.
Saying a lot. All right. Last week, if you go back and listen to the last podcast I put out with you on there, you talked about some technical levels of where you thought corn was headed. And once it got to those levels, then, there was the low had been made and we're on our way out of the hole that we're in. The number was 409. And I think if you look at the markets today, right now where we're at, it's 409 and a quarter. You've seen 3 straight days in a row of climbs of pretty progressive gains out with no help from the outside markets. So that shows you that there's a demand signal going. Throw that on top of some news coming out from Michael Cordonnier. I think that's how you say his name. I'm butchering that. I think
it's Cardinere.
Cardinere. There you go. All right.
Yeah.
Cardinere. He pretty well respected agronomist that posts a lot of different stuff that you see out there. Talked about the month of August with some heat and some of the issues that we saw there, where he is now estimating the U.S. corn crop at 182.5, which he knocked about anywhere, depending on where you're at, anywhere from a half bushel to a bushel and a half. And he's also seen soybeans down a little bit from where they're at 53 bushels per acre compared to what we saw USDA talk about the other day. So I guess, Shawn, as you're looking at this, there's some real news now showing that, hey, yeah, we still have a big crop coming our way, but there are some headwinds ahead of us as far as production goes.
What's amazing, and every grain analyst with their head cut off, running around like a chicken, telling you how much lower corn goes. I call it the dartboard market, throwing out a dartboard. I'm at 350. I'm at 3.25. I'm at 3. You know, it's like competition. Who can put the lowest price out there? Once you start getting the dartboard, you know you're getting near the low, because that's just ridiculous when you get that kind of copycat action, as I call it. We've been adamant, that we believe that we were trading the largest supplies on spreadsheets, meaning it never was real. Just because the spreadsheet says something doesn't mean it's real. It's a spreadsheet. It's an estimate. It's a guess. And a spreadsheet is not reality. And I remind everybody that between 2013 and 2020, we predicted 3 billion bushel carryouts the following year 4 times. And the carryout was never larger than 2.2 billion bushel carryout. So just showing you how bad the spreadsheets can be the year before, but the market trades the spreadsheets. You have to trade what's likely to happen. And that's what we try to discuss on your show. What I try to discuss in our reports is what's likely going to be the case versus what the market is currently trading. What I believe the market currently traded is the largest supplies that we're going to trade in grain markets for the foreseeable future. And that's usually when a low is made. It's interesting that the last major important low that was made in grains was August of 2020. Wouldn't it be poetic justice if we made the next really major important low in grains in August of 2024? August seems to be a really good month for these kinds of shifts in sentiment. In fact, if I can share my screen, I can show you one interesting chart that shows you how ridiculous how ridiculous the market has become. This top right chart is the relative value of corn, soybeans, and wheat relative to all ag markets that trade in the marketplace. Here's the green box that I drew. And you can see we briefly touched it in, here in 19, this was the farm crisis, by the way, 1986, 85 right here. And then we traded it back in this box here in 1999 during the Asian currency crisis, if you recall. Had all kinds of problems. We traded here in 2004, 2005 was the next time we got into the box. This is when we had, large crops in the U.S. If you recall, that's when we had the storage shortage, where we had to pull piles and piles of corn in Nebraska, your lovely state. I remember I was walking Nebraska during that time, and you couldn't see the sun during the day because the piles of corn were so high because we had no place to store the grain.
Right.
And then of course we had 2016 was the next time we got into the box. This was the European currency crisis. And then of course, look, we're actually at the lowest price level since 1948, Casey, relative to all other ag markets. This is the grain markets specifically, SRW wheat, soybeans, and corn. The chart to the lower left is the relative value of grains to all commodities. And you can see that, we are the third cheapest relative to all commodities since 1948. Now, just because a market is cheap doesn't mean it immediately has to reverse, but good things happen to cheap markets. And the point it being is that this is one of the greatest overshoots that we have seen as represented in relative value since 1948. And in my opinion, given that, if you're on the physical buy side of grains, if you need to physically buy wheat, corn, and soybeans and meal, if you're not locking in these prices right now, if you're complacent, if you're sitting around saying that you're believing all these bears, that's going to go down forever, zero bids coming. If you can't make these prices work in your business right now, Casey, I don't know what else to say, but this is an opportunity like August of 2020 to get yourself on the input side of the equation, buttoned up, with incredibly economic grains that you can feed your business for the next several years, and I would have to believe you're going to feed it very, very well. And that's the takeaway here. There's every once in a while you get something super, super smart to do on the buy side, like August 2020. This is the next one. There's times you get a great chance to do something smart on the sell side, like we were a few years back when we had $13 wheat. It's a pretty good opportunity, right?
Yeah, pretty good.
So I don't know what else to say, but I do believe that the grain markets are beginning to shift. Yes, and this is interesting. You know, everyone gets complacent with weather, but weather is always happening. It's never stopping. There's always a change. And the month of August, going back 150 years, was the 5th driest in the Midwest ever. I don't think a lot of people are aware. Now, it wasn't hot, but it was the 5th driest on, since in 100 years, the 5th driest. That's not going to add bushels to corn and soybeans. It's going to take bushels away. If it was hot and dry, it would have taken a lot away. But if it's moderate temperatures and dry, it's going to take some bushels away. I think, Cardinier, is I think his comments are suggesting, that he's seeing that. And I'm hearing a lot of other farmers saying, the corn it did look really, and starting to really deteriorate here in the last few weeks.
I've had a lot of conversations like that.
Yeah. We're seeing a lot of tar out east. We're seeing a lot of leaf hoppers starting to show up in places that I've never seen leaf hoppers before. None of this in and of itself is like the game changer of all, but it all
adds up.
It adds up to it's not going to be what it was supposed to be.
Yeah.
And so, we always talk about this idea that when you're trading pitch black sentiment, if you go from pitch black to black, you get a big move in the market. When you're pinned at such a dark spot, you don't need the light. You don't need a sunny day. It just needs to be a little less black, and you get a big rally in the market. And that's what's happened. We went from pitch black to black, and we put 25 cents on the corn market.
Yeah.
Nothing's actually happened yet. But we put 25 cents on the market, and nothing's really happened yet. We're back. Corn is back where it was in early July. Wheat is back to where it was in mid-July. Soybeans are back to where they were in late July. Just think of that. After all this valley of the shadow of death of negative sentiment, and prices have not made material downside really since July. And we have what could be one of the worst starts to the Brazilian growing season in 100 years.
Yeah.
I'll leave it right there.
That's a good segue into my next question. And so if you look at, I've read several articles, about these mystery shipments of soybeans that are being sold. No one knows where they're going. And then, oddly enough, they show up as Chinese exports. And you start looking at all the different stuff, all the articles like, is China buying our stuff? You brought up a good article before we got started about a gentleman that was talking about, hey, we could be seeing the end of Brazilian exports the way we see them now going into September and October, simply because of the lack of supply of soybeans that they're starting to run into in Brazil.
Well, his point was, I think his name is Bill Tenier. I think that's how you say his last name. But he was mentioning that exports collapsed in August relative to July, and that the pace so far in September is falling further. Meaning, it looks like the Brazilians have cleaned out of soybeans, despite everyone telling you they're going to have soybeans to sell for the rest of their lives. Their view is that they could run out of soybeans to sell within the next 45 days. And remember, they won't have soybeans to sell, Casey, until March of next year. So all the data that we see says that soybean demand in China has set all-time records of all time, never seen before in the history of the soybean market. Their bean crush is at an all-time high. And so and we're seeing a lot of soybean orders coming from China for U.S. soybeans. We are the best price in the world. So there's a good chance here, Casey, that we are going to see ripping exports for the rest of the year because there's no one else to buy it from. And on top of it, given that we have no idea what's going to happen with our elections and what the policies are going to be post-elections, if I'm the Chinese and I'm looking at Brazil being cleaned out and I need more soybeans and I don't know what's going to happen with tariffs and trade wars and such,
Right.
Yeah. I think I would just get a whole bunch of soybeans. A whole bunch of soybeans bought and delivered before I find out what the new set of rules are going to be. That's just me speaking. I don't know that for a fact, but it could be that we have grossly underestimated demand for U.S. soybeans from China. And if that's the case, the spreadsheets, which are never real, remember the spreadsheets are not real. They're simply a guess and never right, may be way, way off with the stocks to usage that look manageable now that may actually be fairly snug when it's all said and done when we find out how much soybeans were bought from the Chinese. Just a what if scenario, and also of course China, the soybean market is the first market that could feel the issue of the Brazil drought if the rains don't start falling by mid-October and they start really falling behind on planting. They would be the first market to react to the weather in Brazil on top of it. So interesting stuff going on, Casey. What does all this say? We're going from pitch black to less black. And if we actually see the light, well, then that's a whole different story. I'm not saying we're seeing the light yet. What I'm saying is we've gone from pitch black to black, but we see catalysts in the market. We could see the clouds part ways and the sun shining. And if we see the light, then we haven't seen anything yet with what's going on to the upside here. Nothing.
Right. Okay.
Not saying that's today or tomorrow or next week. I'm saying that could be later in the year. But my job, your job is to look out ahead and what's ever going to be talking about. And I just see lots of catalysts for a much lighter sky than pitch black. Right. So.
Okay. All right. Let's shift gears here, talk a little bit about what's going on in Canada. Canada and China have been at each other's throat here for about, 2-3 years now since Canada jailed one of their spies, and that was a whole thing, and it's just kind of boiled over that. And China likes to use the canola crop in Canada as their whipping post, and they're doing the same thing again. China got mad about some tariffs on electric vehicles, and they said, well, we're going to put some tariffs on your canola then, if that's how you're going to be. And they went back and forth, and now we're back to the same thing again. So I guess your thoughts on that, Shawn? That's one of the major crops coming out of Canada, and if you're looking at that, how do you see that affecting that market?
Mommy, he hit me! Stop! I don't have the patience for toddlers anymore. I just don't have it anymore. Not that I ever had patience for toddlers, but, I fail to see any benefit that the Canadians are going to have to mess with one of the few good things going on with the country, which is their agricultural sector, their agricultural trade, their ability to export food, have a balance of payments, surplus. These are all wonderful things. They have to sell canola to the Chinese. They have to. There is no other buyer. Right. They have to sell to them. So it's kind of like, you have one car. You have to drive an hour to work. You must drive the car. You're not going to be able to walk it. You're not going to be able to ride a bike. You can't afford an Uber. You have to drive the car. So figure this out. Kissy, kissy, huggy, huggy. Give each other a nice parting present, and let's get back to trading with each other. I mean, just knock it off. Chinese will come back and buy canola. This is just their way of when Canada gets a little bit when they throw a tantrum. This is just a way of them, hitting them with a ruler and saying, no, that's not the way we're going to behave, right? So they'll figure this out. What's interesting, I always look at the market action. I don't mean to poke fun. I am poking fun, but I know for Canadian farmers who have canola, this is serious business, and I don't want to say like I'm making light of the situation. I really do not believe, however, this is serious. I want to be very clear. That's why I'm making fun of it. But if I look at the price action yesterday, Casey, we got down on, this is January canola. We got down to 578 and change intraday. Okay. And we are now at 595, meaning we had a massive intraday reversal yesterday. And today, if you look at how we're trading, we're trading well above that level with an inside day. So I think the market is trading the idea that this is just a short-term issue, not a long-term issue. If they really felt that this was going to be something that was going to last and persist and really back up canola into the country, I think that you would not have seen this market pick its head up and have a violent reversal. It means it's going to stay under pressure until this gets resolved at a lower level as the market just tries to gauge it. But the initial reaction from the market, for those that trade the market that know probably more in aggregate than anyone else does individually, are saying this is a short-term problem that's going to be resolved. If and when it does get resolved, Casey, canola is going to go right back to where it was. Yep. So if you're a buyer of canola, a physical buyer of canola, any dips that we're seeing here based upon the short-term skirmish in Canada, I would be viewing this as an opportunity to buy canola while there's this temporary distortion to the downside. I don't believe it's going to last. I can't tell you when it's going to end, but I can't imagine that the Canadians are going to ultimately choose not to sell canola to the Chinese. I don't believe that's going to be the ultimate conclusion. When they get into a soft room and the psychologist sits there, with his book of words, and they're going to say, repeat after me, you will sell canola to the Chinese. And I think they're going to agree to that, whether hypnotically or not. They're going to do it. So,
yep, for sure. Okay, man. That's a good one there. We're going to come back again on Friday. We'll hit the protein markets, maybe some of the soft markets there a little bit, but I think it's a good place to stop for today. Shawn, if folks want to reach out to you and get more information about what you're doing over at Hackett Financial, what's the best way to do that?
Twitter page at Faradex11 is our handle. We also post a link to LinkedIn. Website is Hackett, Hackett, advisors.com. I was telling you, Casey, we did a 1-hour interview yesterday with Real Vision, which we do from time to time, that we'll send to you, and we'll try to post for people to take a look at. It goes over a lot of our weather work, and also talks a lot more about Brazil and deforestation and such forth and so on. So your listeners might find that to be an interesting thing to take a look at. So
right on. Definitely worth your time to watch those, Shawn. When Shawn does those are really good programs, and if you can see that, make sure you check it out. Very, very well worth your time to watch those. So, Shawn, appreciate you being the podcast, man.
Thanks, Casey. See you on Friday.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the video version of this on the YouTube channel, which is the Moving Iron Podcast YouTube channel. And you can also go to TikTok. I guess we're done trying to ban TikTok, so seems like that's been hemmed up. So check out us over there at Moving Iron Podcast. Also go to movingironllc.com for everything Moving Iron related. If you're a dealer in the finance realm, or if you're some kind of a trader, something like that, and you want to come to the Moving Iron Summit, send me an email at movingironpodcast at movingironpodcast.com, and you can get more information there. You can also go to movingironllc.com, like I talked about. You can see the Moving Iron Summit tab up there to get all the information about that as well. So with that, I'm Casey Seymour with Shawn Hackett. Let's move some iron, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers, and close more deals? Reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century.